Investors, do you know what I hate the most? Deep V's. If you're a guy, why are you wearing such a deep V-neck? This is an acceptable V-neck. What you're wearing is not. No one wants to see all that. You don't have boobs either, so why do you need that much cleavage? Goddamn hipsters ruin everything all the time. But you know where I actually don't mind a deep V? In the markets. And that's exactly what we got after that quick mini crash just a few weeks ago. But does this V bottom mean the bulls are back in town? Today on Fallible, I'm going to show you the key level markets need to move past to give us the all clear signal for the bulls. And I'll also tell you the #1 factor our team looks at to determine a top in the market. So if you're thinking about going long, stay tuned because you're going to want to hear this. What's cracking, investors? AK from Fallible here. Now, in a previous video I released during the mini crash, I explained that the drop wasn't the beginning of the next financial crisis and that it was just a standard correction. Just like Trump's presidential seat is still intact despite all the nasty stuff he gets into, the long-term bull market is intact too despite that nasty drop. If you didn't see that video, I'll link to it above. The question that remained though was how long the correction would actually last, and just how nasty it would be. Well, I guess I'm lucky. Or maybe I'm just slow at releasing these videos because as soon as I released that last one, the market hit lows and shot higher. And that's where we got that deep V look I love so much. And now the S&P 500 is flirting with its 50-day moving average. The 50-day is showing some resistance, but the S&P is doing its best to thrust through. It's basically the same type of action you'd see from a horny preteen and his first girlfriend. And as I say that joke, I realize I should probably stay away from creepy preteen jokes. But the level we're looking for the S&P to break is 2750. If the market closes above that line, it should quickly move back to previous highs. But if the market fails at this level, we may see it shoot back down again to possibly form a double bottom base. But there's some good data that supports markets breaking through this level. For example, take the reversal in junk bonds, which are a great gauge of investors' risk appetite. If investors are buying these dicey bonds, then that means they're feeling risky and frisky, baby.
Oh, behave. Yeah. Yeah, baby. Yeah. Oh.
It's a signal that they're ready to buy up stocks as well, showing us that the buy the dip mentality is alive and well. We also saw a similar quick reversal in the percentage of stocks trading above their 200-day moving average. For a rally to be sustainable, you gotta see a large breadth of stocks participating. Because everybody knows it ain't no fun if the homies can't have none. The other factor that tells us how the market is doing is sentiment. It's funny how bearish everybody got after this recent drop. Twitter was full of a bunch of gloomy guys named Gus, all comparing this market to the one we saw in '87 right before the crash. But when you still have bears calling a market top on every down move, then you're really nowhere near the end of the bull market. Because here's the thing, the market loves to piss off the largest amount of people possible. Kind of like Trump. So if everyone thinks the market's gonna go down, it'll go up. And if everyone thinks it's gonna go up, it's gonna go down. And that's why bull markets finally die only when there's complete euphoria. When everyone's way too excited and making way too much money, that's when it ends. Bitcoin. When people hit this sentiment level, you see them take on a ton of leverage too. And from this data, we are clearly not near the leverage levels that signify tops. Now, if you want to know when we're actually about to hit the top in the market, then subscribe to this channel and hit that bell so you get emailed when new videos are released. Our team will be able to guide you the whole way. Stay fallible, investors. Bye.
Wouldn't it be crazy? But you still amaze me. Wouldn't it be crazy? But you still amaze me.